Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. Today we're looking at Vince Holding Corp, and it seems like they've been dancing on the edge trying to keep their shares listed on the big exchange. It's a classic story of a company fighting to stay in the game. So what exactly is this report all about? Well, it's an 8K filing, which basically means something really important and immediate has happened with Vince Holding Corp. Think of it as a company's way of telling the world, hey, something big just went down. This specific filing is from August 5th, 2025, and it's all about their stock. You see, companies that are listed on major stock exchanges like the New York Stock Exchanges, like the New York Stock Exchange or NYSE, have to follow a bunch of rules. One of those rules is about their company's value, specifically how much the market thinks the company is worth, and another is about the company's own, specifically how much the market thinks the company is worth, and another is about the company's own financial health, like how much money the owners have invested in it. Vince Holding Corp got into a bit of trouble because they weren't meeting one of these key rules. The NYSE basically told them, your company hasn't been valuable enough on the stock market for a while, and your own financial health isn't strong enough to stay listed with us. This is a big deal because being delisted means you can't trade on the big fancy stock exchange anymore, which makes it harder for investors to buy and sell your stock and can really hurt the company's reputation and ability to raise money. This wasn't a brand new problem. Back in May, the NYSE had already sent them a warning. They pointed out that for 30 days in a row, the average market value of Vince Holding Corp stock was less than 50 million, and Unchained had a store being told its overall brand value and the owner's investment isn't high enough to be in a prime shopping mall. But here's the good news, or at least better news. Vince Holding Corp didn't just throw their hands up, they came up with a plan. They showed the NYSE a roadmap, a strategy to fix their financial situation and boost their market value. And the NYSE looked at this plan and said, okay, we'll give you a chance. We accept your plan. Now, this wasn't an immediate pass. They've been given a deadline, a plan period, which runs until November 6, 2026. That's a little over a year to get things right. During this time, the NYSE will be watching closely. They'll be checking in to make sure Vince Holding Corp is actually following their plan and making real progress. If they slip up, or if the plan just isn't working well enough, the NYSE could still decide to kick them off the exchange. The best part of this acceptance is that Vince Holding Corp can keep its stock trading on the NY while they work on the plan. This is crucial because it means investors can still buy and sell the stock, and the company has a bit more breathing room and a much better chance of attracting new investors or making deals. It's like getting a probation period instead of immediate expulsion. However, and this is a big however, the company themselves are being very honest and saying there's no guarantee they'll succeed. They can't promise that the NYSE will be happy with their progress or that they'll definitely meet the requirements by the deadline. This is important because it means investors should be aware that there's still significant risk involved. If they fail, the consequences could be pretty rough. Imagine your stock being harder to buy and sell. That's reduced trading liquidity. It means fewer people are interested in trading it, which often drives down the price. It also makes it harder for the company to raise more money in the future because investors might be wary of a company that can't even stay listed on a major exchange. And it's not just about money. Companies often use stock options or grants as part of their employee compensation. If the stock is delisted or its value plummets, it makes it much harder to attract good talent and keep your current employees happy. Why would someone want a stock option for a company that's struggling to stay on the stock market? Following this important notification on August 6th, the company released a press release to let everyone know the good news about their plan being accepted. This is pretty standard for public companies. They want to keep their investors and the public informed about major developments. This press release is included as an exhibit, meaning it's attached to this official filing. It's basically the company's official statement about what's happening, framing the situation in the best possible light, which is why it's always good to read the actual filing to get the unvarnished facts. But you also see a mention of an interactive data file. This is part of a push to make financial filings more accessible and searchable. It allows computer programs to read and process the financial information more easily, which is a good thing for transparency and analysis. Finally, the report is signed off by Akiko Okuma, who holds the important titles of Chief Administrative Officer and General Counsel. This is the signature that officially validates the document showing that the company stands by the information provided. Now let's zoom out and look at the bigger picture for Vince Holding Corp. The fact that they got this reprieve from the NYSE is a lifeline. It shows they have a strategy and are actively trying to improve their standing. However, the underlying issues that led them to this point haven't magically disappeared. They need to execute their plan, which likely involves boosting sales, cutting costs, or maybe even restructuring their business to make it more profitable and valuable. The key will be whether their plan translates into actual sustainable financial improvement. The risks they've outlined are very real. If they can't turn things around by November 2026, the consequences could be severe, impacting everything from their stock price to their ability to operate effectively. It's a high-stakes situation and investors will be watching every move. What's your take on Vince Holding Corp's situation? Do you think they can pull themselves out of this, or is this just a temporary fix? Let me know your thoughts in the comments below. If you found this breakdown helpful, be sure to give this video a thumbs up and subscribe for more deep dives into the world of corporate finance. And don't forget to join our growing community on Discord. The link is in the description. Thanks for watching, and I'll see you in the next one.